Welcome to the State of the Markets podcast. I'm Paul Rodriguez of thinktrading.com.
I'm Tim Price of pricevaluepartners.com.
And our very special returning guest is Jonathan Escott.
If we're not recording yet, I can show you something. If you turn your camera on, I'll show you. Do you know Darren Brown? You know your illusionist guy in England.
Yeah, Darren Brown. Yeah, that'd be great. What do I need to do? Turn the camera on, did you say?
Yeah, I'll just show you something behind me. Just for fun.
Okay.
And how to do that? You don't have to.
Oh, yeah.
On the video.
No.
Well, I'll show you. Actually, you don't need your camera. Look at this. Can you see this?
Yeah, I can. Yeah.
When I was at university, he lived above me, and he was very weird. Very nice man.
Recording in progress.
You see that?
Yeah.
That is what he thinks I look like.
Well, he does also.
Careful.
He does like famous people, doesn't he? And that is amazing that you've got. I love his work. Absolutely love his work. That is fantastic.
So bad though, because I'm not a mean guy, but I was mean to him because he did all kinds of tricks on us. But now we know. Now I know he was actually practicing. Like he practiced hypnosis, he practiced all kinds of things. And one of the things he pretended to go blind over the course of a couple of weeks.
Really?
And he wore this extreme makeup in his eye, like properly disgusting. His eye shut. He then started wearing an eye patch. He then started wearing like a paisley eye patch, making it all a thing. And eventually, because I was getting worried, I just called his mom, because we sat opposite each other at breakfast every day in the hall. And eventually, one day he came down and the eye patch was gone, and he just had no explanation. Then I got really annoyed with him. And he was on Desert Island Discs not long ago, and he said he regretted one event at university about playing that trick on his friends as part of his learning to be an illusionist of persuasion. So I had to wait 30 years. I feel vindicated because some people didn't believe me when I told that story about him, but it was true.
Wow, that's amazing. He did the thing with the gun in the Russian roulette thing, which was pretty amazing. I've been following him quite closely, and his before he.
I believe the police have been involved.
Yeah, he so he asked for people to be on that, and he asked them to send a DVD or actually it was a VHS video. They had strict instructions, and I actually entered it, and then thankfully didn't get through because there was this whole process of how you had to be susceptible. And I still, to this day, don't know how he did it. I don't know. Did you ever see it, Tim?
No, I don't think so. It doesn't ring a bell.
So he kind of whittled down, I think, about 90 people to one person, and then
He whittled 90 people.
Yes, and then it wasn't in the UK. It was some island somewhere where the gun laws were different, and this guy had to load a bullet into a gun and tell him, well, he said, is it in 1, is it in 2, is it in 3, it's one of 6 in the chamber, and then he took the gun and fired it at his head. There's a bit more theatrics, you have to watch it, and even if it was a blank in the gun,
You can still do some damage with a blank, can't you?
it would have done a whole load of damage. So it was just one of the most amazing moments of television. I'm assuming you've seen it, Jonathan.
Yeah. I mean, I'll tell you one thing I did take away from that. But, that was a long time ago when I was just an undergraduate in Wills Hall. And because of course he was quite impressive at he wasn't nearly as impressive as that back then, but he was just starting to figure all this stuff out. And he was called Darren back then. He changed his name, and also he was gay, but we didn't know. He's all again Christian. He says a few things were going on in that guy's life, right? But he did make me think about persuasion and hypnosis, and because when you've really experienced it, you think, okay, there's something going on. And I remember when Scott Adams died recently.
Mm.
And before Donald Trump got elected, I don't know if we discussed this before, but he said, he has a funny way of talking, Scott Adams, but he said Donald Trump is using wizard talk because Scott Adams himself had to learn persuasion and hypnosis because he had some voice problem he misidentified it, but he thought a cure might be learning to be more confident and learn persuasion skills, and he became a full-on hypnotist and all the rest of it. Anyway, so he said, I can recognize a pattern, and he said people like Trump he has this skill, the way he can say things, it just gets through the usual game of politics. Like you remember a simple the way Hugh Matthews Syed had a really good article in the Sunday Times a couple of weeks ago, summarizing this really well, saying something like, you may not like Trump, but he is some kind of a genius, which of course people don't want to hear because they assume you mean you like what he's doing, but it's more how he plays the game.
Yeah.
So, for example, silly stuff, the stupid names he gives people, the handles, it sounds immature, but they really stick once you've heard it.
Sleepy Joe.
Yeah. And then when he's asked questions like, did you rate that woman? A normal politician like Keir Starmer would say something like, I condemn the strongest words
Not my
like-"
fault, but I'm not going.
Trump's response was, no, she's not my type. So it's kind of outrageous, but it is very deflective and it's very hard for an interviewer to keep on going. So he's got some kind of wizard talk way of dealing with these situations, which, I mean, obviously he's won twice and he's still going. So
At least twice.
so far, and counting.
Yeah. So how much of this can we have in the pod? Like, is it 0 up until now, or I suppose the Darren Brown stuff you don't want in?
You can have it in if you like. I mean, there's nothing secret.
Oh, okay.
But yeah, I mean, I don't know how you like to introduce me because I think calling me a friend of the podcast is probably the easiest way to explain it. Who this random semi-retired bloke is.
Yeah, because you didn't want to be called a fund manager, did you?
Well, no, like I'm a retired bond dealer who's an expat in loads of countries by accident, and then became a chief executive of an investment, which was the worst part of my job actually.
Yeah.
And then now I'm sort of a semi-retired guy. I'm on a board of a couple of things.
Yeah.
I still look at markets and I'm very interested in all this stuff. Obviously, that hasn't gone away. And Tim and I have common interest in certain people we look at.
Yeah.
Similar enough worldview. So what we're doing here really is called confirmation bias.
Absolutely. But that's okay because we can still ask difficult questions if we need to. But okay, well let's say welcome back to the pod, and why don't you just say what you've just said there, because that's a perfect explanation as to who you are.
Okay.
And was it the religious conversation that you wanted to have today, or should we?
Well, I mean, I'm not shy to talk about it.
Yeah.
But it's obviously even I'm just a straight up Catholic guy, but I happen to be practicing and just take it. It's nothing. I don't think it's woo woo, but I know that it makes people get a bit uncomfortable and think you're just a weirdo who doesn't understand science and that kind of a thing. But yeah, I'm okay to talk about that as well if you like.
Yeah, no, that's great. I think that's what kind of prompted it, and I didn't want to shy away from it. But I'm always interested in the market stuff, so maybe we could talk about that afterwards. Okay.
I mean, I think this the segue into it is I think because all this AI stuff. Like I don't know any more than anybody else about how this all plays out, but I think I can definitely see by accident of me being Catholic and I like reading some of the philosophy and the theology books from back in the day, that a lot of the talk around AI is really missing, like it's philosophically really missing stuff. And it's not just woo-woo. You have people like Richard Dawkins, who are obviously a highly respectable guy.
Well, I wouldn't go that far.
Well, let's just stop because otherwise I won't be able to edit any of this in, and it's quite important stuff. So Jonathan Escott, welcome back to the pod.
Hi guys.
So for people who are hearing you for the first time, just give us a précis of who you are.
I was a bond dealer for 20 odd years in an investment bank, and I lived in a bunch of countries. Singapore, Australia, which was my favorite, and Tokyo, which is also great, and Canada and UK and Ireland. I ended up being chief executive of a European investment bank. And then I retired in 2013. Well, now I'm on a board of the Troy funds, but that's just a non-executive role. I met Tim, or I think back in 2003 or 4, I guess. And we'd been
exchanging commentary emails a little bit before that as well.
Yeah, I think we spoke a lot about. I mean, we first cut our teeth talking about I mean, I think I can remember RIT Capital Partners even back then when I liked it, when Jacob Rothschild ran it. And then trend following, because I was getting into that, and you and me both, thank God, discovered that then. And then Tony Deedon, obviously, we had a nice long period being pretty close with him. And I think that's, but as I was saying to Tim and Paul earlier, listeners need to beware of extreme confirmation bias because we're pretty overlapping on some of the big stuff. I mean, the Austrian economics angle, value investing, trend following. So Paul, his job is going to be to ask us annoying questions that take us out of our comfort zone. Does that sound fair?
That sounds absolutely fair. I mean, even if I agree with stuff, I still like to ask questions around it because I accept that people who are listening might not agree or have a different point of view.
But there is also a possibility that in some of these predilections that we have, we're simply right.
Yeah, absolutely. I mean, you can follow common truths across a lot of areas, and I think that's what makes it interesting. If you read 100 books on trading, you'll find pretty much the same core rules within them, but they're just applied in a very different way. And everyone has their own way of looking at the markets, and you can never say that you're right, your way is right, and another person's is wrong. The only way to define it is whether you make money over the long term, I suppose.
I mean, that's why I think this business is so interesting. That unlike a lot of areas in life, you can tell if it works because you have a P&L attached to it, and it's black and white. It's absolutely provable in a way that philosophy doesn't necessarily come so close to, or for that matter, even issues relating to spirituality or religion. But the thing about investing, and I would call it investing and not trading. So to that extent, I may be slightly at odds with some of Jonathan's perspectives. The thing about investing is you either make money or you don't, and that's black and white. And there's no getting around that. It's like the same thing as saying that the price is the price. Everything else is subjective, but the price is objectively true. Whether or not it's manipulated isn't even the point. It's objectively true. It's the one thing that is true in a increasingly untrue world.
Okay, well, I think I got my first opening to start squabbling.
Okay,
Into contention.
Let's go.
Yeah,
Bring it on.
So we've been probably very sympathetic to gold for a very long time, like in my case, since August 2003. Now, materially so, not just your Peter Spiller 1% of backward gearing kind of thing. And my worry is that some people are right for the wrong reasons, and some people are right because they were right. So of course, both sides will think they're right. So there are people, I think, who've owned a lot of gold who feel very clever right now because it is, they've gone up more than the S&P in that time easily. But I also know, as everyone should know, there's such a thing as a gold bug where it's more a psychological disposition, and those people have always been with us. And you wonder whether a lot of people, for example, in gold, the majority of them, have they been lucky? There's gold bugs who had that 25-year window. For example, if you look at that, for me, it's imprinted on my mind because I scare myself with this. Like, am I one of those idiots as well? So they're not really idiots, but am I one of those fools where Doug Casey wrote a very famous book. It was #1 best-selling book in America in 1980. And there's a YouTube video of him being interviewed on some big show. I can't remember the name of the guy now who did the show. I'm not American. But he's taking questions from the audience and the TV, and he's saying you should go to have it all in silver. You should have it all in gold. Like the government spends out of control, inflation's out of control. And of course, it was just a shocking call. For 25 years, you should have done exactly the opposite. Buy all the stuff he would have hated you to buy, like long-dated bonds of all things. And I just wonder, so to your point, Tim, some people can be right in terms of price action, but they're right for the wrong reasons. Well, for example, London house prices. Like, how many people do we know who they just own a house because they live in London, but they will credit the enormous rise above whatever they thought would happen over 30 years to their somehow skill at picking Kensington. It's like, well, you and me would have a different explanation for why.
The distinction there is that the Brits on average tend to be obsessed by property above all other forms of saving or investment, whereas gold doesn't fall into that category. So we are as a nation sort of semi-obsessed with property in a way that, for example, the Germans certainly aren't. They're a nation of renters rather than owners. So you could just have been lucky. Whereas the proportion of people out there who are gold bugs is a tiny fraction of the percentage of people who are property bugs.
Yes,
I mean,
that's for sure.
what you're talking about here, Jonathan, is what's described in Taleb's book about fall by randomness, and it could apply to really any type of investment, whether it's gold, property, wheat, whatever, the U.S. stock market, um, bonds. Pick anything, and it could apply to that. And to me, that is why a pure technical approach is the only one that I kind of like to follow, because ultimately you're constrained by rules that say if the price doesn't go up, I mean, it depends if you're shorting as well, but the price has to trend. But if the price doesn't go in the right direction, you're not allowed to buy. And for those reasons, I've never heard Taleb ever criticize technical analysis, but I've never heard him say anything positive about it either. So I'm not sure
He'd
why
be
that.
very supportive. Like, I'm not speaking. I met him, but I didn't get into this with him. Well, I think he'd be very supportive of long convexity strategies. I think, like, I think we're talking about there. So I don't think I've heard him use the word trend following, but stuff that benefit. Like, he likes that term anti-fragile,
Yeah.
which, just for the bored listener, people think, oh, what's the big deal with his books? But he usually is. He's quite annoying, an angry man. But he does have a good way of marketing concepts that options traders they live with, but normal people have never really thought about. So you're used to something fragile. Like if you tap a glass on a ceramic sink or a metal sink, you'll soon see the difference. But anti-fragile means if something actually gets less fragile the more you stress it. That's quite weird. It's not just it doesn't break; it does better in adversity. And there's very few investing strategies that do that. So trend following, for example, would be one of those. So when silver goes bananas, or like this year, or cocoa, or maybe oil at the moment, but it's not moving that. Or then you don't want something that will just do well. You want something to explosively do well with it. And there's very few things that do that. So he would definitely be a fan of that, and also the whole Kelly formulas sort of thing, position sizing, correlations, and the stuff that I'm sure you do when you teach your trading courses. But I think it's the only way to invest, though, because one thing I'd say, the one good thing about having just let's say rough long exposure to productive equities is companies by definition, they sort of over long periods of time have to earn money to survive. So they are sort of turning whatever inputs they do into something productive that grows. So if you, roughly speaking, have a decent exposure to something like that, even if it's just a broad index, over long periods of time, that should by definition prevail. And you could even say trend following. So indexing is sort of a trend following, because you're always buying whatever's the top 100 or top 500 or the top 30, whatever index you're following. Do you know what I mean? Because it's pulled out of the top 30.
Yeah.
So in a way, it's a clumsy way of just being in top 30 most productive companies. I know that people out there will know that there are some in there that are not, but over long periods of time,
Well,
the feckless ones don't survive.
That's exactly the point, and it's the point that Andreas Klenau, I think I may have mentioned him to you, who, when he looks at momentum strategies, that's exactly what he's talking about. How actually the S&P 500, the FTSE 100, whatever main index you want to look at, is a trend following fund in itself. And you might not think of it as that, but actually
just in slow motion.
Well, it is, because over the long term, it will reflect the strongest. And we know that one of the criticisms of people who just go out and buy the top 100 at any one snapshot point in time is that things rotate in and out. So, BCCI was in the top FTSE 100 at one stage, and now it's bankrupt. And obviously there are things in it today that weren't in it a few years ago. So the point is that it does act like that. And the main principle behind trend following, whether it's applied to perhaps stocks or other products, is when you're looking at stocks, it is a different, because it's a different asset class, you might have to treat it in a slightly different way. And you treat trend following in stocks with just looking at the strongest of the strong and then trying to go with them and rotate in and out. But when it comes to the general market, you're just looking for any trend. And therefore, there's different strategies that you can apply based upon the asset class. So you could just treat the FTSE against oil, against bonds, against gold. Or you could just treat the FTSE itself, look at the 100, and then try to outperform the FTSE with your own strategy. So again, it's like anything. The more you get into it, the more kind of complex it becomes. But in the end, you have to kind of simplify it back out into what exactly are you trying to achieve. And I think that's whenever you're talking to people about trading or investing, I think that itself is the most important question, because what Tim always says is when you're managing money for very rich people, you don't want to lose it. So that is what you're trying to achieve. If you're like an 18-year-old kid and you've got a couple of $1,000 and you want to try and, turn it into 100 or you blow it up, you're trying to achieve something completely different.
What scares me about, and it does scare me, and I'm not scared. I'm not scared of volatility because I think when you've been in markets like I was for so long, you're so used to it. You start becoming, you don't like it, but you just get used to it. What I don't like is, so I agree with you, but I think for more normal people, they don't want to start making trading programs and guessing which one to use and all the rest of it. They probably think, well, 60-40 portfolio, I don't know, some combination of equities and bonds, and just leave it alone and minimize the fees, do it in a tax efficient way and leave it alone is the way to go. But I really worry for two reasons. One is there's plenty of charts available that show that 60-40 portfolios have gone through generation long negative real return periods, and usually from a very high starting valuation point. So the S&P 500 today, for example, famously has had a 10-year positive return from that starting PE ratio. I know that's simplistic. I know that you can think of AI is different this time, and America's got some unique position. And I know
that's assuming, that's basically arguing that 150 years of market history has no bearing on the current situation.
Yeah, and then as Neil Ferguson
said, probably does.
Right. Yeah, and as Neil Ferguson said, the internet was quite a big deal. Yet it shows up everywhere except in productivity numbers. And it makes you just pause for a thought. Like, of course, there'll be winners individually, as we know who they all are now, obviously. But it's extremely hard to think that generally the entire market will somehow change the previous pattern of the last, as you said, more hundreds of years, really. And the other thing that worries me, this is the Austrian stuff that I think's sadly a bit, it's almost woo-woo, like saying if you're Catholic, it seems to be a bit woo-woo, and I think it's old-fashioned and people just think it's finished and we're moving on. But the Austrians, I finished my deep dive and all that stuff when I thought it was bollocks at the beginning. Then you start reading all the books and arguing with Sean Corrigan, who was very patient, and he taught me an awful lot. But you think, well, if they're right, there's a flaw at the center of the money system itself. Let's forget price fixing of oil by OPEC. Let's say money itself is, even if there's central, I'm not a conspiracy guy. I think because some of my friends from university went into central banks, and I used to deal with central banks in my job. They're just guys who just believe a different financial model, right? But I think if you have a well-meaning bunch of central bankers, let's just say, I know Tim's rolling his eyes there, but if they are following wrong models and on average having rates too low for too long and causing the Cantillon effect where you're benefiting people closer to the money spigot and further away, you're causing a very long-term thing to happen that has never happened before in history. So you've never had money totally unanchored from anything. So I'm not saying gold, I'm not religious about gold, but the good thing with having some kind of anchor to gold or anything physical or limited, even Bitcoin, is it does to some degree put the handbrake on what central banks and governments can do from a spending perspective. And if you think about it, every time we came off a gold standard or changed the system, it was never because it was a calm period of reflection. You had like science, where you had some scientists refute the previous theory. It was because it was politically expedient to fund a war and the Napoleonic Wars or
the First World War.
Well, yeah, exactly. Wasn't they just decided, well, that theory was wrong? Like if you look at the Austrian theory, it's proven it was just not politically expedient, which is a great clue for me that there's something in it. That's what made me start looking initially in the first place. And I just worry that if that's true, I think there's a website called, excuse me swearing, I think is it WTF or what the fuck happened in 1971? It's got all these charts. And it's quite a funny use because in 71, the Bretton Woods, we came off gold altogether. The reserve currency came off gold backing 100%. And then since then, you can see a clear break in total debt. The ratios have gone, they've completely broken away from income. And if you think about the entire system, corporate, government, and private, that is the GDP producing part. Well, government doesn't produce GDP, but it doesn't, it has to service that total debt, funded and unfunded. And if the total debt is exponentially growing, at some point that just can't keep going. And people
There's
say,
a,
well, it's been going for years, but it could go. I mean, that doesn't mean what 200%, 300%, 400%. So it means if one day in the next 25, 30 years, God willing, however long we have to live, it goes wrong, we have a massive Japanese-like scenario. Like how much of the E and the PE ratios of these indexes is based on an expanding debt to income ratio? And that is what worries me. I'm not predicting it. I don't know when it'll happen. I don't think anyone has a clue. But I think at some point, inevitably, there will be a point where the next bailout or next government program will just not work. That's what happened in Japan. And then they start to get desperate. But Japan is not a good example for us because they were the one massive country economically that was screwed when the rest of the world was booming and they were an exporter. So their example is actually quite a good one. But if the Western world has a failure problem, who will bail us out? Because we're not exporting to anybody else.
well, this is why Elon Musk wants to get us to Mars, because the next bailout's going to need to happen on a cosmological scale. There's not enough money in the Earth to fix it. There's a book called Gold. I forget the author, but Gold, the Wants and Future Money. And I think within that book, the author or someone he cites within the book makes the point that since the Nixon gold shock of the early 70s, it's the only time in history when money hasn't been anchored by anything. And as the clue is in the title, that's unsustainable. And we're probably now reaching the outer limits of that unsustainability, because to go back to your point about central bankers, whatever you think about central banks, they've been unable to control inflation because they are singularly the key culprits in creating inflation, which is increasing the money supply. So it's no surprise that for the last 100+ years, certainly since the Fed was established in 1913, the dollar's lost purchasing power, all fiat currencies have lost purchasing power. It's been a one-way bet, and it will continue to be a one-way bet because the system requires constant expansion, because the debt-based monetary system requires constant expansion. End of story. So deflation in this world is basically game over for central banks.
Well, so you
have to bet on inflation because it's the only rational bet.
But is it also possible that just to say that you do have to bet on it, but what about as you mentioned, Japan? When that happens, you realize how kind of redundant the tools are that they're going to try to use to create inflation, and therefore, what happens in that scenario when we have deflation?
Well, Paul, my man, that's exactly what that's. So one of the squabbles I have with Austrians, they sort of, and I am quite Austrian-minded. I don't know what the correct word for it would be.
Austrian adjacent.
I'm Austrian adjacent, but I think they think it's going to be like a straight line. But as you just said, I can easily see it won't be a smooth ride. Like, let's say gold goes to 50,000, it could go to 50,000 via 1,000. I mean, I have no idea. Who knows, right? And I think it is very plausible, as we saw in 2008. What's so scary about 2008, it was the entire banking system itself was at risk. So if you have at the moment people worried about private credit, I mean, it'll be really annoying, but an awful lot of that stuff's moved off bank balance sheets. So in a way, it's not so systemically problematic. But if you have a Japanese-like situation across, I don't know, Europe and America, I don't think that's going to be straight inflation. That will be horrendously deflationary, and the central banks and governments will do all kinds of tricks. Russell Napier, financial oppression on steroids, but it could be really bumpy, like literally a few decades, and it's very hard for us here guessing how the path of how it plays out. I think, as Tim said, in the end, obviously the way they'll have to inflate out of things. And one of the problems I had with Austrians is they go a bit Rothbard and think we need to just go straight back to gold. Or I'm thinking, well, that's just that is not reasonable right now. That no political party would stay in power more than a month doing that. And yet,
it is all the existing political parties are basically not living much longer than a month, or certainly the prime ministers aren't. It's the UK government, for example, has turned into the Italian government. It's like, who's the prime minister today? It's like when you're in a coma or something, you get out of a coma, and the first question they ask you is, who's the prime minister? You go, hang on a second, what time is it?
I have to ask a question about UK politics. So there are some things that I think there are things we can disagree about reasonably, like what should the correct marginal tax rate be, or what band? Like, okay, there's no right or wrong. That's just a horribly difficult question. There are some things Zach Polanski says, or Ed Miliband, and you just think they can't really believe what they're saying. Like, it's so patently ridiculous. So when I was in Norway, I went on a Norwegian cruise to see the Northern Lights, and the people on the boat were nearly all not English. And the girl who was giving us the talks we're going by all these offshore refineries, and she pointed at these, and then she pointed across the water to presumably where, I don't know, Scotland was, and saying, "We're drilling here, and then they are, because they're over there, what we sell it to them over there, because they don't want to drill it, because they think if they buy from us, it doesn't produce carbon." And everyone on the boat was laughing and thinking, just, it's sort of child level stupidity. And I do wonder, do you believe that those people mean what they say, or do you think they're so optimizing for playing the game to get votes, they just don't give a shit?
I would go further than that. So I don't think they're serving the interests of the UK people. I think they're serving the interests of the Chinese. I think they're treasonous.
But not
Yeah.
consciously. I doubt they're consciously.
Oh, I could believe it was conscious as well, but like you say, they're such low intellects that I could believe they're doing it inadvertently.
I mean,
they're so stupid.
It makes you wonder how supposedly intelligent people can say what they say. I mean, it's
Yeah, that's what bothers me.
It's mind-boggling.
If you're not capable of eating a bacon sandwich, then I think there should be questions about your ability to do anything else.
I mean, if you think about how when the question of immigration came up, and then Starmer pivoted to that's why we need digital IDs, didn't make any sense at all. When he talked about taxing the winter fuel allowance and how it was going to cover, and it was like, why are you doing that? You know that's going to cause problems. I talked to people who were very defensive of that policy and said, well, you know what would happen? Yeah, it's really, we can't afford it. We can't this, we can't that. And I said, okay, stick a penny on the price of fuel. No one will give a shit. Just give the money to the old people. It'll be okay. No. Politically, that's terrible. So price of fuel's up by however much. And it's like, right. So what's that done for your argument there? We're going to have to deal with it anyway. So 1 pence on the basis of that makes no sense. And he's backtracked on it. And he's backtracking on the farmers. And then now he's in a situation where we've been screaming at him for all the things that he's been doing that have been wrong and politically just out of touch with the people, which is why Reform have got where they've got, because they've just been completely head in the ground about what's going on around them. Today, his leadership is in tatters. They're against him in his own party, and they're looking at Angela Rayner, who hasn't, I don't know,
a cabinet of all the talents.
I have no idea why she's even in government. I mean, look, I would never.
One thing he's done, you've got to give him credit. He has got Gordon Brown back, and you know that.
Oh God, yeah, the guy who said
we need a gold market visionary like Gordon Brown to see us through this crisis.
We need the guy who said that we'd got rid of boom and bust and not to worry about the financial system because they're heroes, and then claim that he'd saved the world. Because of all the bailouts that happened. I mean,
he did. It's not just selling the goal. He actually told the market a week. But did he tell the market? He did told the market he's going to do it before he did it.
Well, yeah. I mean,
he's just a very generous person.
I mean, and so then here we are with Starmer saying that actually the problem we've got, it's not his leadership, it's Brexit, and let's focus on that. I mean, to make your point as to what in the name of all that's holy is going on with the government. Who's advising these people?
Even their own game. That's what I don't get. Even by their own lights. If you were Keir Starmer, and let's say Jonathan, you had a role play, and is they called? I'm going to get this acronym wrong. Was it LARP, live action role playing? I'm trying to be with it with the young people, but
okay.
But then you're thinking, why would you do that? Like there are some people. People love talking about humility. I'm so humble on LinkedIn. It's full of that crap. Like I'm so humble to win this.
Humble bragging.
Yeah, I hate that. But I thought someone said this idea, and it stuck with me because I needed to hear it. He said, "What do you do to prove you're humble? Or what do you do?" And you go, "I don't know." So I thought, I got a good answer. I deliberately read perspectives from people I don't like. Because that they're not just charlatans. There's no point wasting my time. But I try to read like well-educated people, including investors and all the rest of it, thinking, okay, well, let's read this. Not Cathy Wood, for example, because I think I think some of the stuff she writes is, it's truly delusional. But like for example, there's a guy called Rob Vernal, and he has a fund called the Business Owners Fund. And I don't agree with his style. I think he's just a style drift guy, lovely guy. but I read his letters just to see, because I think he really means it, and I'm trying to see, I could be wrong, right? He's done well. Maybe he's not just a high beta guy. Maybe it's skill. But I think you look at some of these people, and Dominic Cummings, for example, if you are Keir Starmer, I would listen to Dominic Cummings through gritted teeth. Because he says things that are very sensible. Like, you need to win over the margin of people. They're the swing voters. You don't need to play to the people who are hard labor, because they will always vote for you, even if you're most woke pro. You don't need to do the woke stuff that annoys the middle ground guys. Just go for the marginal guys to stay in, and they just don't. And the immigration stuff, just do something about that. We'll just push back a bit on some of the legal stuff. I mean, it just seems like they're leaving an open door deliberately. I don't know why they're doing that. It's an unforced error.
If you take the perspective that this is actually a deliberate, controlled demolition of the economy by communists, it makes a lot more sense that way.
Yeah, I know Tim goes a bit far that direction, but I admit it does.
Well, if the evidence is,
It does.
if it looks like a controlled demolition, if it sounds like a controlled demolition,
And it quacks
walks
like
around saying this is a controlled demolition, possibly it's a controlled demolition by communists.
But what's happening with that is that they're going to be out of power, because actually what
Well, that
it's
assumes
doing,
we're going to get another general election.
well, power will just force over to move over to the right, which is exactly what's happening. And so it's not going to work if that's truly what they're trying to do. The only way they could do it is to somehow change the voting system.
Hillary got elected and then stopped all further elections. So there's a good,
but that's
tried and tested, playbook for this stuff.
Yeah, so I was just saying, if that's what they're going to do, then yeah, that's possible. But I don't know whether that would. I don't think that would work. But look,
I had interesting insights into. I was invited. I'm name dropping here, but it's not my event. So there's a guy called Alex Wood who is a UK fund manager living down in Cornwall. He runs Kerno Asset Management. He's got a very interesting operation. He invited me some lunch at a fancy restaurant, and had interesting people. They had that guy. He had Anthony Bolton of Fidelity.
Oh, right.
And there are about 5 or 6 other guys. There's a guy called Tim Bunting, who I didn't know. And I embarrassingly, he was going on about Revolut and whys, and I embarrassingly asked him some questions. People laughed, and then he said, this is a killer. He said, when he put £1 million into Revolut and the company's value is 6.5, what he was looking at was this, that, and the other thing. I said, hold on, sorry. When you put 1 million into Revolut, and then everyone was laughing and said, well, he said, this is the guy that did invest a sixth of Revolut, and it became worth, oh God, nah. And it's now the company's 100 billion. So there's that guy making us all feel rather pathetic as investors. But then he was saying something interesting about the banking system. That he summarized it saying that Lloyd's, the average cost to maintain an account, I think he said was £200 or £400 per customer. And he said Revolut and Wise is something like 20 quid. So he's saying the gap is so massive for the high street banks is pretty futile.
If you were trying to clear up politics, the first thing you would have to do is try and remove the influence of lobbying power, monetary lobbying power.
Yeah.
And I think part of the issue is that there's a very different approach for people who work in the financial markets, who know that actually what you are really trying to do is find where the weakness is in your argument, in your strategy. And the only way to do that is to listen very closely to the other side, because they might have a point, and not to think arrogantly that you're always correct. And that's completely the inverse of what politicians actually do. Their job is to pretend that they're invincible, impervious to any form of criticism, and just to keep marching on with a kind of bluster that shows that they are always right and in control, because that's how they feel a leader should act. And the problem is that's not really, it doesn't really wash with people in the real world. People actually prefer you to say, look, if Starmer just said, look, I've got things completely wrong and I've made some mistakes, and this is the message that the British people have told me, and I'd like to try and rectify that. And I think that the course that we will move forward with will work. And unfortunately, they never admit they're wrong. They always just go with whatever they think will get them through that this current crisis or this current situation. And that's why they get tripped up by the internet when you go back 10 years or so, and they'll be criticizing another politician for not leaving for the same reasons that they're not leaving, and why nobody wants to believe anything that they say, because they know that they're just doing it. They're saying they're doing it for the country, and maybe they think that they are deep down, but that element of trust will never be there if you just can't admit that you're wrong.
Well, Richard Feynman, the physicist, addressed this quite well, and he said, if you've got a serious problem and you've got two politicians, one says, here's the answer, and I'm really confident, and here's the answer, and people will vote for that. And another guy's saying, well, it's a very complex problem. I think we should take advice from a variety of people. No one's going to vote for that second guy. So the problem is effectively a human problem, not a political problem.
Yes.
That people are stupid, and they'll vote for stupid people who are very, very confident in their wrong, stupid things.
Well, it's more people who project, like if you had again, this is another Taleb thing. He says if you've got two doctors and one looks like somebody off one of the TV shows who looks really, well groomed and slick, and you've got another one who's
like Magnus Pike,
who looks, like not the typical image of a good doctor. And who would you use? He says you would use the one who actually is good at his job, not the one who looks like a good doctor. The problem is that you might have an absolutely brilliant politician, but unless you're a great orator, it's not going to work. And
so I've got to bring that back to financial stock, because I love that observation by him, and I didn't understand it at first, a bit slow on the uptake. But there's a fund that Tim and I know, and it's run by a guy called Paul. Let's just say that it's compounded at this stage at over 20% for 27 years. Now, I met him. I know, well, Tim and I have known that guy since early noughties, but I wonder, because I have this problem. I don't think I'm autistic or anything stupid like that. Sorry, I'm not saying stupid, but I'm not just labeling myself with something that is where people actually have it. But I think it's baffling to me. There are people who have, let's say, demonstrably incredible track records like that guy that no one knows about, or a very tiny niche do. But then you meet the guy and you go, oh, okay.
Now I see.
Nah, he's a very nice man, but he's a very, he's not a highly polished, like Stanley Druckenmiller, a charming, beautifully spoken, presentable guy, very affable, like Warren Buffett. Obviously, he got a great way of expressing himself in a folksy way. But I think most people who are really good with money, they're not like that. They're a little bit different.
yeah,
I'm not saying anything negative about Paul, by the way. Obviously, he's done a fantastic job. But you know what I mean? Some people are not naturally marketing geniuses.
Well,
And it's
I
very-
think what you've touched on is the fact that to be successful in an investment, ultimately you need to be both a successful investor and a successful marketer, a good marketer.
Yes.
And most people, I mean, the first quality is rare enough. To get two is almost impossible. So for most, I think the reason probably most successful managers don't really work is because they fail to see the importance of good marketing.
and
Yeah.
by the way,
Or they look down on it. They look down on it as like a cost center. You remember when we're in the trading floor, the sales force always called a cost center, but of course, without them, you wouldn't have a business. You know what I mean?
Well, I mean, without someone selling something, there is no economy. Somebody has to sell something. End of story.
and just for the avoidance of any doubt, this Paul is not me. So just
Oh, I thought it was.
so, but I always think that to a certain extent, we tend to kind of underplay how geeky actually we are in wanting to look at this stuff and talk about this stuff and analyze this stuff, compared to what you were saying earlier, Jonathan, about the kind of general public and what they should do and how they should trade. They're not interested. They're basically, most people are absolutely not interested. And even if you try to explain in very simple terms, I know our listeners are, and they're kind of different. I'm just talking about like the general public. Andrew Craig, who was on the pod, has done an admirable job of trying to educate younger people, and obviously anyone else who wants to know, about how to invest and how relatively simple it is. But when I had discussions with intelligent friends of mine about how the markets work and how they could take control potentially better than maybe some of the managers that are looking after their money or not, as the case may be. And even the basic concepts of just, well, you could look at a different sector. They might be invested in X sector. You could look at Y, and they find that kind of difficult. And like, oh, I don't really know about that. I said, well, it's actually quite simple, really, but you need to apply the time to it. But for some people, this whole area is like, oh, hang on a minute, you're talking about maths, and I'm going to have to just shut off because I can't listen to anything that relates to this subject. And that's unfortunate.
So it is overcomplicated, though. I mean, I'm very sympathetic because I have a family, as hopefully we all do, and you just see, and it's nothing to do with intelligence. I think you're right. It's definitely to do with your. I disagree with my wife for years about this, but I just increasingly realizing if I'm a bit odd, and I think you need to be a bit odd to be interested in this stuff.
Yeah.
And it's by your nature, not because I would say, oh no, it's because I'm reasoning and thinking. He said, no, it's not that. It's fucking boring for most people, and you just find it interesting. And most people don't care about that stuff. They just wouldn't mind having nice savings, invest with someone sensible, leave it alone, and then come back in 20, 30 years and need it. And it's gone up quite a bit. That's all they really care about. They don't want. Yeah, she's right.
It's annoying, but she's right.
Yeah, and they don't really want to hear the every update and read your letter and see all your clever pictures and charts and arguments. They're not really that bothered. They want to just feel comfortable, and you do you, and I'll carry on doing my normal socially well-adjusted person's life. But the thing that I'm pushing back a bit, because what bothers me is, like, I live in Ireland, and I'm just looking now because they have a hilarious amount of cash. So the household deposits are 170 billion in cash. It's a country with like under 5 million people. It's just if you not into paternalist economics, but I mean, it wouldn't be such a bad idea if you just defaulted people into some boring indexy kind of thing, because the amount of money that is losing people against the real purchasing power of money over a long period of time is incredible. Can you imagine if people just had some kind of low cost, super tax efficient exposure to some kind of general market balance boring, even the worst normal boring fund we could think of? How much better the entire population of the country would be, UK and Ireland, right? So much just sits in cash, earning no interest, then it's taxed, and then it's the inflations that you're earning nothing or going backwards. But if you just taught kids, instead of teaching about all the wives of Henry VIII or whatever it is, a few basics, it would be of a national benefit like you wouldn't believe.
Yes.
Like, have you seen Japan, for example? I mean, it's a bit of a reach, but have you seen Japan recently? Their total debt to GDP ratio has fallen because there's not the people, the government, by buying equities, they're now re-rating, has meant that they've actually reduced materially their total debt to GDP ratios, which I don't think is that well known, because people still talk about Japan's big debt problem, but actually their net liabilities is down to 65% last year and falling since then. I mean, remember how Japan used to be?
Yeah, 200%. Yeah, but hang on a sec. How have they done that? I'm slightly.
Yeah, right. I'll send you because I've got all the board. Do you know a guy called Dan Rasmussen? He puts out great. But he got a Verded cap in America. He's a very interesting guy. And he said in 2012, the Bank of Japan started buying domestic equities at scale. So de facto sovereign wealth fund, and at zero borrowing costs, and it's re-rated enormously because Japanese stocks done so well. So net liabilities have fallen down to 65%. I can send you the link if you like. Or he's on Twitter, for people who like Twitter, Verdad Cap. So VERDADCAP, very well worth a follow. Not too political, just quite factual, kind of macro guy.
Yeah, I mean that's brilliant. I mean, what you were saying there reminds me of, you mentioned Tony Deedon earlier, and it's. I had the pleasure of meeting him with Tim, it was just absolutely amazing. It was great to talk to him. And when he was on our pod, he discussed how really what he is a principled investor who looks at people who are probably just completely obsessed with the product that they're creating. And because of that, they are not going to be swayed by some financial engineering that might improve their profits. They're only looking to improve their product. And again, you have to have a very different type of mind to approach that in the markets, to not be tempted by leverage, by short-term gains, by thinking, well, we could just, turn this into some sort of franchise and multiply the model out, etc. that takes a very special sort of person to both identify that, but also to enact that. You've got to be completely immune to all those temptations.
Do you know why I think he does? I think why he does that is because the way I don't think he's ever said it like this, but I'm pretty sure this is what he's thinking. He's worried about the thing I mentioned earlier on, that what if this whole money system thing has a material Japanese like hiccup or something when the extra debt to GDP ratio game starts to break. And he said, I want to own companies that are not reliant on the system carrying on as it is, that will, like you talk about Fromage Bell, saying people buying comments. He knows so much history about these things. Fromage Bell, he used to love, or Robertet, the fragrance people. So the people who always need to buy those things. They don't have stupid leverage. They've gone through world wars. They've really been battle tested culturally. And nearly all the stocks that are the darlings today, like it does make sense mathematically on a piece of paper. Of course, you should use leverage. I mean, if you're just optimizing in a Pavlovian way, the recent decades of our experience. But the thing is, most people, I was born in 1971. So for my entire life, that has been the way to go. So if you've been the more Tony-like company, you look like an idiot. You'd have been way better off taking on as much debt as you could service with your.
Yeah, but some of those companies are multi-generational, so they'll pre-exist 1971. They will go back centuries in some cases.
Yeah.
Their objective will be survival, not just operational.
Well, exactly.
Optimization of return.
But if you look, taking it up a level, if you look at what's happened with happening COVID, and it's happening again with what's happening with Trump and China and all the rest of it, you can, and Taleb talks about this, you can financially optimize a system so you adjust in time everything. Then you get these scenarios where you realize, I'm not sure if this, but there's so many statistics, like nearly all the elevator parts come within a 60-mile radius of a certain part of China for the whole world, of a key part of the whole. You're realizing, look, it's maybe financially the most sensible thing to do, and it may have worked for a long time, but you do need to build in redundancy. And I was seeing some articles about France, because, the English, we love to tease France, but partly we're jealous and we love them. But they have built quite a bit of redundancy. Like their nuclear power, number one, and then a lot of their military, and the way they keep onshore a lot of their own military construction capacity, like stuff that we've just let go, or in the way we've let our domestic energy production go. That stuff is maybe financially, I mean, I don't agree in the case of energy, that you can see why you might have done it by cheaper energy elsewhere. But it does mean when you get these moments, you may not survive through them, and you'll be captive to whoever can supply you with whatever you need. Even with the farming in the UK, like my old Austrian self would have said, let's maximize P&L because it's a voluntary trade and all the usual reasoning. But I do think, at the risk of upsetting some very hardline Austrians, there's something a bit missing, like a game theory aspect to Austrian theory that doesn't really work. And you know the article by Warren Buffett, Squanderville and Thrift Bill? Do you remember that one from way back? Where he was saying, I think he wrote 1980s, so shows you how long they've been worrying about this stuff. Imagine one country saves, Thrift Bill, and the other one just spends, Squanderville, and one issues debt, and one produces stuff. So that looks great. Short term, but long term, you will end up with one side having all your debt and all the productive capacity, and the other side is in debt to its eyeballs, and has lost a massive amount of productive capacity. And then here we are today, decades later, and that is kind of what's happening in America. I think Trump is a symptom of that. And
it is different. There is a sort of limited get out of jail card if you're the reserve currency as well.
Yes, yeah. But I think for Europe, I think
Europe's completely fucked.
Because we're a geopolitical price taker. We don't have the currency. We don't have the the only positive thing about Europe I heard that I'm choosing to believe. Dan Wang wrote the book Breakneck. Is a really good book on comparing America, saying America is a nation of lawyers and China's a nation of engineers. Quite a funny way of looking at it. And he said Europe is a bit of a confusing one because they don't need to be struggling. He said because they were the engine of a lot of the ideas that led to the wealth creation in the rest of the world. He said
you can't sit on your laurels though.
Well, yeah, but he said we have chosen to handicap ourselves. Not like we've come up against some hard limits. It's a handicapping problems. He said they can learn to take the handbrake off. And whatever you think of Trump, it is interesting to watch Germany suddenly decide that maybe shutting nuclear plants was a stupid idea. and the UK slowly shifting towards maybe we should start drilling for energy. And you're starting to see maybe we should roll back some of the more extreme ESG policies. So it's if you take the handbrake off, Europe could easily thrive again. But I mean, not much sign that's happening.
Well, Europe would need to abandon the European Union, which is completely redundant. But the fact that Keir Starmer's now seems to think that his get out of jail card is to rejoin the EU, which is completely unnecessary. It's like a symptom of the problem. Why shackle yourself to a slow-growing, over-regulated corpse?
One thing I heard about, because I'm starting to think more and more about games here, because I had to study that at university. Because when I was at university back in early 90s, we were still worried about the Cold War and nuclear stuff. And I do think it is quite an interesting way to look at stuff. So you look at Labour. If you're Labour and you know you're Keir Starmer, you know you're going to lose in the next 2-3 years. You might as well go for settling old scores and just doing vanity projects or setting time traps or booby traps for next people, because you're not going to win. It's not like they're genuinely trying to win, as there's no hope that's going to happen. So why not just go for stuff like that you get to rejoin the EU, to set the process in place? That's what I worry could be happening. I mean, Tim, a question for you on the Austrians and their game theory thing. I mean, they'll say, well, that's great. America's producing stuff. And if America's stupid, so China's stupid enough to take our treasury bills, happy days. It's a win-win. But I think that is sort of very simplistic, their argument.
But also that paradigm ended. That paradigm ended with the sanctions and freezing of Russia's reserves after the Ukraine conflict began, and it went into overdrive when Trump basically tore up the playbook about defending the petrodollar and offering Middle Eastern countries security protection in exchange for having them take oil or have their oil priced in dollars. All these relationships have broken down now, so there's a real fantasy feeling about everything now.
Yeah, I agree.
So if you're nearly $40 trillion in debt, and that's just the official on-balance sheet stuff, you can't really afford to piss off your generous foreign creditors. But that's exactly what the US has done. So it's no surprise that the dollar is where the dollar is and why gold is now where gold is. And you're seeing the same thing across the entire commodity space.
Are you not a bit? I mean, I don't know. I wonder with the stable coin. Not pretending I understand it, but I'm looking into the stable coin. I do wonder if that could end up being quite a sneaky way to extend.
I think the stable coin, the way I look at it, is simply a sort of smoke and mirrors device to ensure there's an ongoing viability for US Treasury debt. But it's not real money. It's junk.
Oh yeah, but
junk with a bit of pixie dust, crypto pixie dust sprinkled on it.
But it keeps the game. I think it extends. It's extend and pretend.
Well, not if a sufficient number of people refuse to play ball. Because I've long felt that the real sign of crisis will be when the Fed, for example, decides to cut rates and the bond market just says, fuck you.
The one thing, and maybe it's because I was a bond dealer, but one thing when I finished reading Human Action, and I did read it, and I'm really glad I did, but I'm not going to read it again. I thought, okay, I believe this makes sense. It's common sense, really. But then I thought the thing is, it can go like Adam Smith said. There's a great deal of ruin in a nation, and I think what he meant was when you have a lot of capital, like you're a very rich country, you could like Rome, it can take a long time to die because you can do an awful lot of stupid stuff and keep going. And I think America is obviously in that situation. But I did think, just like you said there, that I don't think people understand how massive bond markets are. If bond yields materially rise, and they're getting to levels that will start to.
But they've done that in the UK already.
Well, the whole system starts to break, and because really then you have to make those payments. If you don't make the payments and you default, it's not it's a cascade effect. It really is problematic for the whole, and all other assets are based off bond yields. People don't realize how fundamental they are to the whole game. I think that you're right. If bond yields get 8 or 9%, can you imagine I mean? Yeah, that's when you have a Japanese moment to think. You have a forced massive deflation. And that's when then it's up to Paul's point. Do we get deflation first, inflation later? What exactly what is that? How's that play out? I just don't know.
So a couple of points. What I was thinking is, as we were talking about Tony Deedon and strategies, I mean, that's pretty much your philosophy and your fund philosophy, isn't it, Tim? To not lose money, to be out of the system. If the system collapses, you want to feel like you can sleep at night. Would that be fair?
Sure. I mean, I think that's the thing is, what's weird about the current situation is it seems to us to be crystal clear exactly what the problems are, and John has already alluded to them, which is basically too much debt, full stop, and how the market attempts to deal with that problem. If that's the case, then one of the answers is surely be comfortable identifying stuff that you don't want to hold with a barge pole, touch with a barge pole, and that's government bonds right now. And John alluded to it at the top of the show, the whole 60-40 thing, and we will continue to talk about this because it is so relevant. Markowitz and modern portfolio theory is all bollocks, and yet it still is the mainstay of how most conventional investment portfolios are managed now by most of the financial services industry. If someone came to you as a scientist and said, by the way, what you believe is complete bollocks, people would probably have a rethink about what they believed in. But in finance world, you don't have to have any validity to what you say as long as enough people believe it. So we've been taken for a giant ride, and we will definitely come back to this topic. But the idea that you hold bonds as part of a balanced portfolio to reduce volatility is nonsense. All it does is compress your return, and now it adds to your risk. There's no point in owning bonds whatsoever. But a lot of investors will not have been told that by their financial advisors.
And you talked about the trend following fund guy, earlier, and the reason why the broader people aren't interested in perhaps his fund. One of the reasons for that is another problem in how risk is measured. And if you look at the methods of how you would measure the risk in his fund, it would actually come out at way too risky. And that's why they don't invest, because the industry standard ways of looking at risk are completely wrong. Well, not completely wrong, but there are different ways.
I'd say you're absolutely right. They're completely wrong. Risk is defined by the financial service industry by and large as annualized standard deviation of return or volatility. That's just, for most people in the market, that's just noise. Real risk is...
I mean, so you're both right, but like I'll give you an example with that guy in January. I think at one point he's up, I think 70%. So this is, by the way, for the listeners, this is an incredibly unusual period. So maybe it's all about to go horribly wrong, because the returns have not been like that for a long period of time, and it comes in fits and starts. But that's sort of the historical pattern.
Well, they don't come in straight lines, but everybody knows
the point.
That's fine.
The people who understand it.
But I can give you a narrative to why the volatility it has to be high. So, for example, he will lean in. So, we don't know in advance what's going to trend. So when something starts really moving, like cocoa or silver, then when it starts moving, he'll get in, and then as it starts expanding, he will let the position expand and let it ride. But then it does mean he's not going to guess when it tops out. But then the when you sell is when you think the trend has changed. So you know that before you sell, that's what's going to happen. But that means it has to come down quite a bit from the top.
You don't get the nail at the top, or you don't get the nail at the bottom either.
But that means that when in January, for example, he was up over 70% at one point, and then it ends up, I think it's a month, only up 40 or 50%. So that means there was a material drawdown during the month that people wouldn't have seen.
Mm.
But you can't get the ride up if you don't know that by definition you have to have some drawdown from the peak, because
if it's not hurting, it's not working.
But that's not how people. Yeah. You can't get one without the other. There's no pain.
There's no gain without pain.
Well, the thing is, I don't see it like that. I just see it as a strategy that deals in volatility in the way that you've mentioned there, and can go through many years of underperformance compared to other strategies, and that's ultimately the problem. The problem is that you can have like 5 years where it's really, or maybe even longer, where it underperforms, where it may just be flat or down, when perhaps the S&P or traditional market is doing much better. And if you say the S&P does 5% a year, on average, then that is going to be extremely difficult to deal with. But, and it is a big but, we know that a highly volatile market is going to come, and it's non-correlated to those markets. And that's when you get 100%, 150% when everything else is lost. And then it's becomes a standout trade. But it's almost like the insurance that people don't want to pay because they don't want to believe that it's going to happen until it does happen, and they all start paying for it.
But I mean, that's why you have a diversified portfolio to begin with.
Exactly. Well,
Not everything works all the time.
But it's
But Tim, the really important part, they're being really pedantic now because it's so important. I think we need to slow down on this piece. What a lot of people think is diversified is not properly diversified. They'll think, oh, a bit of tech, a bit of this, a bit of US, got some Europe, right? But equity, the factor called equity exposure is, you can go and history has shown there's generation long periods. There's lots of them where in real terms, stocks go nowhere. I mean, people tend to look at nominal price charts and go, well, normally that's not true. It's like, I know, but the 70s were a very high period of inflation, for example. And I think you need to really think, if you are of a certain age when you manage to save a bit of money, normally that's, you're middle aged by then, you're going to live 25, 30 years before you need to start drawing that down. So you don't want in that 25, 30 window to be told, well, you're just unlucky. It's one of those periods where stock went sideways for a long time in real terms and you've made no progress. You said you just say to yourself, what could I have done at the beginning of that period that would have, what else could I put my money into just in case this sort of scenario happened that could have helped materially offset that kind of outcome? Because I now realize I had an awful lot of a factor bet on one big drive, which is equities.
Or interest rates coming down to 40 years.
Yeah, and bonds. Well, bonds, the current, bonds, no, that's like a guaranteed low / no real return after tax and inflation. So what other things are there? And there's a great chart where there's a table and it goes through all the usual asset classes and the sad part is, what most people own are the things that go like property, equities, and bonds. They tend to go nowhere in real terms or backwards in those periods. And the things that do well are things like a commodity trend or CTAs or trend followers. And they're the things that nearly nobody owns, or if they have a few percent and they're all gold. And so you do need to have an uncomfortable allocation to those things, even though you look like an idiot in the years when S&P is flying. But over the full cycle of a generation, all of those things should do well enough that you'll have been all right the whole way, no matter what happened.
Well, like you say, the whole myth of diversification is a joke. It's like the bit in the Blues Brothers where they turn up at this country and western bar club and say, "What type of music do you play here?" And they go, "Oh, we play both types, country and western."
That was worth being on this. You're good with your one-liners. Do you have a whole list of those things there, Tim?
Yeah, I've got a chart. I've got an Excel spreadsheet of zingers from films and books that I have updating in real time on my wall.
Having a photographic memory, I think, helps.
I've got to talk about AI. Have you heard of this thing called AI?
Yeah,
It's a fad. It won't last.
We have discussed it at some length, but yes, it's a fascinating subject, like religion that we might get onto.
Yeah, because my oldest son left university. He's now got a job at a pod shop in London. I think he's an AI vibe coder for one of those big hedge funds. So I don't even know what he's doing, but I can just tell that he's continually able to do stuff that people there think you just can't do that because you're not a coder, but he is, and I think it is very impressive. But then I hear some of the arguments by these people. Like you see the AI advocates, and you see people like Richard Dawkins, who obviously knows quite a bit about biology. But then, did you see recently he was talking about his
You thought Claude displayed consciousness.
Yeah.
Yes, and you hear stuff like that, and then a bit like I'm a Catholic and just born and raised Catholic in England and went to those kind of schools and best school and didn't really believe any of it, and then kind of came back to it again. So I know that's a bit kooky for most people, but that's just the way it is. But I do find a lot of those old arguments, the philosophers and theologians of way back, they're still highly, highly relevant because they haven't gone away. And there's because some of those guys they were scientifically behind us, but they were surely not philosophically behind us. The same ancient problems the Greeks puzzled with, the mind-body stuff, for example, which is relevant to AI, are the same things that the scholastic theologians dealt with. And when you ask me for my media pick, I'm going to give you like a little talk that a professor in Maynooth University who gave a few weeks ago, which is really good on this, trying to show that people are mistaking the output of AI, like it because you can't tell, you think, oh, it is actually therefore conscious. And he's trying to use examples that I'll mangle if I talk to you about them now. But one of them is he said that it's in principle possible, mathematically and physically, to create through pipes and strings and other physical matter, no electricity, an AI, as in something that could pass vast amounts of text to create an output. It might be a few football pitches large,
Yeah.
but it could, given enough time and scale and resource, you could build one. You could build a calculator like an abacus. You could build a machine, not electricity, that is like would simulate AI, be very bad and very slow. He said no one would say, well, maybe that whole football field size apparatus is conscious. And his point is more, it's not a defeatist, like it's not a clear debunking of a Dawkins edition, but it does make you slow down and think, what exactly is intelligence? Because if you're simulating like an old-fashioned calculator, you don't go, well, my God, it can do sums. Maybe it's thinking like I am. No one would
And you
think
can
that.
spell boobs upside down.
Yeah. Or Shell Oil was my favorite. Because I was clever than you, Tim. I could do the long ones. But I just think,
Yeah, I like to think I'm concentrating on what really matters in this world.
very good. But, well, hang on, as an investor, you should be more interested in oil. So your investors listening to this podcast are probably a bit disappointed at your priorities, Tim. Just saying.
I'm preaching to the ESG converts out there.
But I just think there's a lot of wisdom that's been lost, sadly. And the only marketing, so I'm not going to sell religion on a podcast, it's doomed to fail. But I do think the debate with the bathwater thing has happened where, same with the Austrians, so that it just falls out of favor. I think the same thing a bit with religion, whatever your flavor would be. And I'm a broad roof guy. Like I remember Tony Deeden said to me once, I think he said he's a red text guy. And I think and I said, what do you mean? He said, I think whatever denomination he is, just Greek Orthodox or something. I'm just presuming on that. Maybe I may be wrong. So he can correct me if he listens to this. He said he pays very close attention when you read the Bible and it's something that God or Jesus said themselves. The rest of it is like, but not as important as what the guy said himself. Because if any of it's true, then that is the stuff that matters the most. And I just remember that, I don't know, a lot of Tony stuff he says, when you hear it first off, you think it's not that big a deal. But as the years have gone by, that really stuck with me, thinking, yeah, rather than getting caught up in these squabbles, like even the Austrian economists do between themselves, or the different strands of Christianity. I'm presuming the Shias and the Sunnis and every flipping thing that humans manage to fight about. If you just focus on the main important parts, I think that matters. And I think it's a shame that we've fallen foul of the divisions. I mean, the Church of England particularly seems to be on a linear, self-destructive path, not listen to what most of the people in England, normal church-going types of the Protestant variety, want, and just going their own direction. I'm rambling a bit here, but and another book at the end I'll give you is one by quite a cheeky, but very engaging kind of a modern theologian, and it's called. You remember the Four Horsemen of the Apocalypse? Sam Harris, Dan Dennett, Richard Dawkins, and who was the other guy? Some other guy. Oh, Christopher Hitchens. So very fantastic writers, very entertaining. But he had a book just countering some of their views. He doesn't not trying to prove or sell religion. He's just trying to argue against the very simple atheistic arguments, in the sense that we've had atheism for hundreds of years, and a lot of his arguments are far more sophisticated hundreds of years ago than the current version. Because the thing is, most people, they don't know what the strongman arguments for religion are, because it's not even in our consciousness. It's only on YouTube. And I'm seeing over here in Ireland, the young are turning very slowly back to like a quiet Catholicism. It's not a muscular Christianity like you see in America. It's quite quiet, as they just do it. They don't talk about it. I just wonder whether it's, in a way, a turning around from what Jordan Peterson calls a crisis of meaning. No, I'm just going on a bit of bender there, but are either of you two remotely sympathetic, or are you rolling your eyes on this stuff?
Sympathetic, definitely to religion. I mean, I grew up Roman Catholic and kind of hated it, and later in life, what I've learned about markets and what I've learned about religion is that you can never say never with anything. So to refute something 100% is completely impossible, because tomorrow we might discover that there is some form of God. We might discover that the whole universe is actually in a black hole, which it would explain why it's expanding at an ever expanding rate. There are so many things that we just do not understand, and the principal one being how we can be here in the first place. But what ties in for me, for what you were saying about AI, is that there is a big difference between intelligence and consciousness. A system that can appear intelligent is not necessarily conscious. And there is no consciousness within AI, even if it happens to look like it is. But the difference with humans are aware of themselves. They're aware that they exist. And we are, with religion, aware of the paradox of existing and how it's inexplicable. And that's, for me, where the line gets drawn with AI. And another example might be, you could put on those kind of meta goggles or whatever they are and go into the metaverse, and it might all appear like you're in a room somewhere, and it might even feel like that. We could make that seem as realistic as possible, but ultimately you're not there. It is simply it's not a real place. It is your stimulus, your eyes, your skin, and whatever else it might be within your brain, that's being tricked and fooled into thinking it's somewhere that it isn't. But you wouldn't say that that's a real place. You know that it isn't. So there is a differentiation. So something that we did actually talk a little bit about this with Glenn Goodman on the previous pod about intelligence and, well, more consciousness. And it's like you say, when you understand how these things are created, how they follow patterns, and that's all they're doing. I mentioned once on the pod that one of the biggest steps in human history, I thought, was that nobody's really mentioned, is the fact that we've created digital technology out of an analog world, which is how all of this has been able to come about. The digital revolution is absolutely incredible. If you think about,
You heard of the Chinese room experiment? This is it's relevant, but there's
yeah,
a philosopher. Yeah, so you know the one.
yeah, and actually, I spoke about that on the previous pod, but I actually,
Oh, sorry.
but before you negate it, I actually cut it out.
No.
Because
I'm not. I think these thought experiments are quite clever, because they make people just slow down and realize, hold on a second. Because they start seeing the analogy like, oh, I mean, it's stupid, right? It's a guy in a box. He
yeah,
doesn't speak Chinese. He gets fed some Chinese words, and then he pumps out an English piece of paper on the side, because he's got shapes he can mix and match.
Well, just a second, Jonathan. The thing I was about to say was that I did mention it, but then I cut it out of the pod because I didn't think I did it justice in explaining it. But if you want to explain it, that would be great.
Oh, thanks a lot. That's what we call a hospital pass.
Well, I think you've just done it basically, but I
think as he quickly goes to Google AI,
well,
it's a famous 1980 thought experiment from my memory by philosopher John Searle, arguing that computers with simulated intelligence by manipulate. This is 1980, right? So these philosophers were there ahead of the fact we can now actually do it. But he was saying we can manipulate. Yeah, so it's a guy in a box.
yeah.
This is not exact. I'm not going to look at the TV screen, so I can say enough that I can remember. So you have a man in a box who's got some Chinese to English piece of paper or something. He can just match a symbol with an English card. And so someone on one side feeds him a piece of paper with Chinese writing on it, and the outside of the box, someone sees an output, which is something he just swaps it for the English translation. And so the point being, oh wow, that machine, it can translate. It understands how to turn Chinese to English. Like, well, So we're now going because we can understand the whole setup. You go, well, he doesn't understand. He's just performing a function inside the box and giving it to you. You can see the English, and the other guy can put the Chinese in, but there's no understanding going on at all in that situation. But it is a bit like an enormous, well, like similar to the thing I mentioned earlier about the pipes and bits of string. It's not thinking, but we're not people like Richard Dawkins is going. Oh. And the problem is, it's what Hayek talked about. Actually, Hayek talked about scientism, where science is true. I mean, it's all no one's any doubt. But it's a fantastic method to manipulate and understand the material world. It's been enormously useful. But the problem is, people then think, well, what I can't see is a Humean thing, where what I can't see or measure doesn't exist. It's like, well, no, hold on, that's a totally different thing, because our consciousness itself, there's a whole mind-body problem. No one can see I can't see Paul's consciousness. I can't even in principle see it.
Yeah.
And then neuroscientists will say, well, I can work out as dopamine and serotonin, and love is just some evolutionary adaptation to form a pair bonding to provide a stable environment to raise children and all this kind of carry on. But you're thinking to yourself, hold on a second, that is not what is actually happening. The first person perspective is subjective. It may be there's all these chemical processes going on, but that is not what is, and one is not reducible to the other. That's the whole problem. So this is the kind of why the philosophers are so useful with AI, because you can see there will for sure be some cranks worryingly thinking we should give AI human rights, and I have no doubt that that is going to be coming down the pipes. And what the other part I worry about with this AI is it's tools are meant to serve humans and what is good for humans. And I worry, you can see it with our kids today, they are now having to compete with machines. I worry that it will make us turn into more machine-like behaving creatures. Like, we're not going to be breeding as much. We are going to be behaving more autistically, because that's what will be rewarding. I just think it could be quite dystopian. And then you have Elon Musk talking about putting things into your brain in the end to make us have super huge memories. And you can see some subset humans are willing this on. I'm thinking, hold on, if you extrapolate to the future far enough, like I could easily see there is some, just now I'm being a bit silly, but sci-fi, you could end up with these a world full of humans that aren't actually conscious anymore. They'd have no first-person consciousness. It's just slowly disappeared, but no one noticed. But they're incredibly productive little units doing whatever task they've given themselves. But there's no kind of inner life going on in anything.
Well, that's a computer at the moment, isn't it? I mean, and that's, you could also say
exactly.
that's a car. I mean, a car couldn't, horses couldn't compete with a car, and humans can't compete physically with a motor vehicle. I think people would. I see what you're saying, and I agree. The transhumanism thing is a very real problem at this stage, because the technology exists to create it, and the first steps, I think, will be obviously medical for people who are quadriplegic or paraplegic person who's given the ability to walk again using this technology. That's how it will happen. But I think the very human element of people is that we do kind of thrive in the environment of other humans, going to concerts, meeting up in person. And if you have a nation of we've got a generation of kids who are obviously growing up in the sense that they've been subjected to the technology far more than we ever were. But that also means that there's a very good chance that they're going to reject it at some stage and spend more time together because of it, because they weren't denied it, and they want to see something different. And perhaps we spend a lot of time on it because we didn't have something like that and we can see the use of it. But I take your point about having to compete against it. That's one I hadn't thought that much about, and I'd have to think more in that sense. But my initial reaction to that would be that that's like anything. I mean, seeing the internet in the early days and how most people sort of discounted it as being not important and just a place to share movies and other stuff and do illegal things, and then realizing it was a technology that could be used for good. And there are people who do use it for good, but there are also people who use it, just to waste time. And
I
ultimate.
think we're gonna have to dust off. I think I like the fact what you said there. I hadn't thought about it. It could be good, right? It is possible. It could be good.
Yeah,
I just have that horrible vision of Wally and my, the what I mean,
yeah,
when my kids are young, there's the Wally movie with fat man and fat woman going around these carts being serviced by robots and being permanently entertained all day long. I'm worried that the mass of humanity might go in that direction. Rather than, I think, didn't Keynes say in the 30s, was it one of those kind of more left-leaning economists, that once we've solved the problem of scarcity, we can be composing poetry on Tuesdays, writing music on Wednesdays, and I mean, complete fancy. Most people will just not do that, obviously. Especially if AI can produce anything you can do better with the click of a button, it'll be incredibly demotivating, I suspect. But I do think we have to go. I think there has to be a turn back to some of the old, or at least engaging. And you don't have to be theological, but they do that. Those you got to remember back in the day. Today, no one. There's not a lot of intellectual horsepower. Back then, the cleverest people went to these areas, philosophy and theology. So you had the elite brains at the time were going and thinking about these things. Whereas today, I mean, being rude, but theology probably and philosophy probably have quite low entrance requirements at A level or to university level, because it's just not that much rewarded. As Charlie Munger said, too much money is rewarding the financial stuff. And I just think that we need to go back to look at some of these old debates and arguments, because they really did think about what it is to be a human, what is good for a human, what is consciousness, what's the difference between consciousness and the physical sciences. Like even Ludwig von Mises and Human Action, it's about human action. He didn't go too much into why they do what they do, but we just know that humans choose to act, and he respected that they make that choice. And then he built his whole theory on top of that. That's what praxeology, that's what it means. It sounds so simple as an axiom, but it's kind of what's so difficult to get around is it's undeniable, because if you do or don't act, whatever, it's that is the foundation. But you've got to get behind the veil. Or why do you act? Why does AI act? Is it the same? Are they doing the same thing? I would say obviously not. But I think unless you start engaging with that tricky part and you leave it to the Sam Altman's, like I was listening to Niall Ferguson on an interview yesterday. It was a good one actually, and he was saying if the Manhattan Project was being run like AI, you'd have like several private companies competing. And he said, when you say that out loud, you think, oh my God, that would have not been a great idea. So that's exactly what's happening with AI today. So every time one party decides to slow down a bit and not release the latest deadly anthropic, cybersecurity busting, you have no doubt that the Chinese guy or the next American company will have no problem saying, well, I'll do it to get the funding round. And I just think you're racing ahead without anyone really in charge of. I also don't know how can you stop it at this stage?
yeah. I mean, it's a bit like the fact that you can have your voice AI'd and your image AI'd, so that online there's no way of knowing whether it's really you saying and doing those things. And that's what's happening to politicians, and propaganda's in certain areas is being used for, which means that the only answer to that is actually anti-technology, is to come away from it, to meet in person. And
Yeah, I agree. I think it could be. I think it could be quite cool. Like, if you've seen this simple anecdote, let's think of a watch. People pay a fortune for these mechanical watches.
yeah,
Like you can, I mean, you can get a digital watch for a fiver. So people are spending £200,000 on some ridiculous watch that's handmade by, I don't know, angels or something.
But they're not paying that for the timekeeping. They're paying for the branding and the marketing and the allure.
The human, yes, but I think it can. I think if AI, let's say, places human intelligence, and it can itself program robots that replaces human intelligence and labor for mundane stuff, it means that humans will then be. I mean, I'm being optimistic. Will be free to demand things that are made by humans. So, for example, there's a big industry in resto mods coming out. Resto mods, that you pick a pretty old car like an E-Type, and you make it beautiful. Like you put in a modern engine, a modern wooden. I don't know about these things, but I saw a show the other day.
proper brakes and stuff. Yeah.
Yeah, but really beautiful.
Mm.
Like they make Singer Porsches now. The Porsche, which is they take an old 911, the really pretty ones, and they make them beautiful. And they're $1 million. I mean, $1 million seems incredible, but they are beautiful. But you'd have thought. I mean, there's stuff like that, but I think could emerge, or maybe people will start caring now about having beautiful stone masonry in houses, or because there will be a lot of labor, and people might prefer to have that So you could argue you could have some return to, and also you could argue humans are actually better evolved using the concept of Lindy again, NASA Tyler. But what did we evolve to do? We were physically embodied creatures. Maybe sitting in front of a computer tapping away like a monkey for 40 years isn't really that good for you anyway.
No,
On the
I
outside
agree.
manipulating, yeah.
I think that's absolutely right. I think that's the truck driver who's spending his life driving from continent to continent or whatever, or cross continents, maybe the guy or woman who could solve cancer. That's how I see it. But they can't because they're stuck in that job. So I'm more optimistic that the technology will free people from the mundane tasks that they need at the moment, or they need to do, or are forced to do. And if we can somehow work out a way where the gains from it are shared amongst people and obviously that's a difficult thing to do, but if it's shared amongst people in an equitable way to give people more time to explore their possible talents that they end up just not doing because they're stuck in some job that they don't really like.
I can definitely see, one thing I can see for sure is poor countries could I think jump the tank or jump the shark. I'm getting all these things mixed up now, but they may not have to go through the grinding kind of agricultural poverty mining phase. They could, is if they have access to computers that like we do and AI, they but they don't have the legacy institutions to deal with. That you could see them. I mean, this is me just being trying to look optimistically. You could see them doing very well. Like as you see it, for example, in Kazakhstan with the banking system. But this, they and you saw that in China too, where they didn't have to deal with the legacy institutions. They just jumped straight to extremely sophisticated use of apps that we don't have in the UK, where we are apparently one of the most advanced users of that stuff.
Well, that's the advantage, I guess, of all the learning that's gone in to producing all the data on the internet. I mean, that's very interesting. That could mean that if there is a massive downturn, and that we were talking about at the start of the pod, looking at emerging countries as being perhaps the sort of counterweight to that, maybe they will have the money and the wealth to kind of readjust the system. And
the most interesting letters I read for sure are those guys. So there's a guy called Lyle Taylor in Singapore, and he has a little fund that he runs, and I read his letters. And yeah, it's you just parts of the world you didn't even. And like also, I think I was mentioning Kazakhstan because in our modern culture, you would think of Borat, and I'm being deliberately provocative, but it's
yeah.
But then, I mean, have you seen that place? Have you seen some of the companies there? Like they're really impressive. Like, and that sounds so patronizing, but I'm not. I'm saying what a dummy I was and how ignorant I was. Some of the letters you read about different parts of the world that you don't really, and also the quantum of people. Like, I mean, there's 650 million people in Southeast Asia, 1.3 billion Indians, 1.3 billion Chinese. I think Pakistan or Bangladesh is another few hundred million. And then I read a lot about Indonesia recently. Indonesia is like I think quarter of a billion, and there's a lot of these value guys who are really quite excited about Indonesia. But it's stuff that, yeah, I don't think they're going to be. I mean, of course, they'll be affected by what happens in the rest of the world. But I think if your general situation is on the massive upswing, and they're very young and highly educated, and they're moving forward, whereas we're just trying to support these very generous welfare systems for an aging populations. Like, where do you think? I mean, the tide is definitely going to be in the favor of one of those areas against the other. I'm sorry to say.
Do you look further afield with your fund, Tim?
Anything goes, but I suppose the natural limits we're bumping up against at the moment are moral ones rather than geographic ones. There are certain types of business that I personally have real misgivings about supporting in any sense, and right now pharmaceuticals would be one of them, for example.
But I remember a while back you looking at Japan as being a massive market, and its stock market has done very well.
It's record highs now.
Yeah, and obviously that's at the time that was quite a big call because of the downturn, that the ongoing downturn, and people were very pessimistic. But it's still a major country that one would assume over the long term would do well. But you're also looking in some countries that just people never mention, from what I remember.
Vietnam was one of them at one
Vietnam,
point.
yeah.
I mean, the problem with a lot of these countries is the level of specific individual stocks. The due diligence is really tricky if you're based in London, because if you take, I mean, Vietnam is still frontier market; it's not even deemed emerging yet, whereas Japan is clearly developed market. But unless you actually speak Japanese and can read Japanese, you don't necessarily get annual reports in English. So it's problematic in a lot of respects still.
And the accounting systems
Have you
are
heard
different.
about? Sorry.
Oh, sorry, I was just and the accounting systems are different.
Exactly. So you've got lots of cultural problems or challenges, let's say.
A nice problem in Japan is some countries in Asia, which will remain nameless, you worry about it's like what we would think as dodgy cultural values, and you're going to be expropriated. And but in Japan, it's the other way around, where they're just so square and so conservative. What could happen is the most likely worst case scenario is a value trap, where they just don't do what a Western person would do. Like I remember when I lived there.
They're still into like stakeholder capitalism.
Yeah, but there's a guy called, oh, isn't it? He writes, he's got a German accent. Oh, God, it comes to me in a second. Jasper Cole, you know Jasper Cole?
Yeah.
He writes really well on Japan. I mean, he's obviously a bit too that way, but he does say we have an example. There's problems in Japan, obviously, but they have capitalism, because we think, oh, in America, you hear, well, you have to pay chief executives a vast multiples to do that job because it's a big company and you need to get the best talent and all the usual stuff. And he's saying, okay, well, Hitachi, I think Hitachi's up. He said that is a massive company too. It's not just hi-fis as English people might think. They're a massive conglomerate. They think the top guy gets paid just $2 million a year. So I know $2 million sounds like a lot, but for the size of that company in America, he'd be paid so much more money. And in Japan, they just think, no, 2 million is loads, because of course it's fucking loads. So he's saying you don't need, and they're competitive, they've got capitalism, but it's just more of a cultural norm. You don't need to pay some more than $2 million to do that job. And it's quite interesting the way you have a proper country with proper industries that are internationally competitive, with the same commercial pressures that we're told the West has, which is why we need to pay people so hilariously, and we don't, they don't do that. And the stakeholder capitalism thing that Tim mentioned. There's a guy. I've got to tell you this quick one about have you heard of a company called Hikari Tsushin in Japan?
No.
Okay, well, I knew you'd say no because neither did I a little while ago. But the number 2 richest man in the world ran that company, and it's a telecom company, and it nearly went to zero. He's managed to keep the company together, and it now he has a bunch of, like, a collection of very old, like as in age-wise, old people doing sales, telephone sales of all kinds of things like energy, water, adult nappies, you name it, and a massive Rolodex across all of Japan. So it sounds a bit weird to us because that's not how we roll, but maybe that's what's in our future when we're all 85 years old. And he uses the money it makes, which is handsome, to buy stocks. So I think he's the one of the top 10 holders worldwide of Berkshire Hathaway in that company. And as the years are going by, he's accumulating more and more of all these little Japanese companies, and and I know he's doing a good job investing, because you could just look at his company share price. And also a lot of the value investors I know in Japan, they copy what he's doing. They copy his purchases. So if you're looking for, like, this is do your own research kind of a thing, it's a very interesting company just to go online and read about it, because it's something. People say it's like a Berkshire of Japan. It's not a Berkshire of Japan, but it is a company where they've got a sensible business. There's now a minority of the market capitalization, and the majority of the market capitalization is the stock portfolio it's building using its own earnings from buying other Japanese companies, which has all kinds of advantages that Tim or I or you can't. We just can't do what he can do as a Japanese local. So it's quite an interesting story.
So, if I may ask, what is the answer for you in terms of investing? How do you wrestle with all these issues of being a value investor, understanding it, trend following, understanding that, and then understanding that we're all a product of the time that we have been in the markets. And as is with religion, if you were to go back 1,000 years, you might think something, or maybe more, 10, you might think completely differently about the way you see the world. How do
Quite
you?
a big question. That's quite a big question, Paul.
It's a huge question, but it's all linked. See, I mean, because that's the other thing about religion. Ricky Gervais said something which was quite interesting about religion. He said you can think of what you like about religion, but when it comes to science, if you got rid of the human race and started again, they would come to the same conclusions because it's kind of factual. And I understand what he means by that. And I was at one stage, I was very sympathetic to that kind of view. But I also go back to the fact that my philosophy is I don't know. I genuinely will say that I have no strict belief in anything other than that I really don't know anything, and that's it. I can
Well, I
think.
think if you, I mean, without getting into, because we very well, I hear what Ricky Gervais says, because science is an objective. You're dealing with like something you and me could both measure a piece of string together. Both is we have the correct ruler. We both agree because it's that's the length of the piece of string. The subjective stuff is different. But then if you go back to, like, I'll tell you the book at the end of the podcast, but Edward Fesser, just human reason can get you an awfully long way to rationalizing a god, some kind of god. It doesn't mean the specific flavor you choose, because then you need a revelation, let's say. So, like, if you're Christian, you would have believed there's a God for Jesus. Did he mean what he said? And then you're in a different area where that's an empirical claim. But we believe there's a God for Julius Caesar. You believe there's a God for Plato, because there's been books written then, and we still have them. So the former one, of just using reason only. So to Ricky Gervais' point, if you removed all human and started again, would they discover science? Yes. I think they'd also discover God, or some kind of a God. Using the Lindy concept of Taleb,
That's interesting.
and you mentioned earlier on, the fact there is any being at all is kind of a marvel. And it's almost amazing how we are so used to just looking past that and just saying, "Oh, just science." Like, right, but the law, where's maths? What's the unreasonable effectiveness of maths to work in the real world? How does my consciousness translate to the real world manipulation of matter? Like, it's such the links we're so habituated and we just take it for granted. The fact anything's happening at all is quite remarkable. And then you get to things like human natural rights, and you can use reason to go an awful long way there. And that's where Thomas Aquinas, but working on the work that the Islamic scholars revealing Aristotle's work to us around about that time. It's kind of amazing, to be honest, how what kind of genius Plato and Aristotle were, and I just don't know why we don't learn more about those guys more broadly at school, because I surely didn't.
Because the purpose of the education system isn't to educate people; it's to keep them in line.
Or make them productive. I've been being little less. Yeah, I mean, I think
But you don't ultimately really, if you're a typical politician, you don't really want an educated workforce. You just want an obedient one.
Yeah, we definitely don't want them thinking too hard about questioning. But did you see Tony Deden's latest piece about democracy?
No, not yet, not yet.
It's quite a good long. Last year he wrote quite a few things last year, but he wrote he's gone into quite a philosophical vein. But they had a good long piece. I'll send it to you after this, about democracy having its own problems. But then Plato, I mean, being pretentious, and I learned this from Edward Fesser, this a Catholic theologian. He himself said that all forms of government have the seeds of their own destruction within them. So we think democracy is great. So, well, at the end of the day, it becomes, I think he said, did he call it timocracy? There's another word, not Tim Price, but another. I think it becomes captured, because then it becomes, at the beginning, it starts off well. Could you have sensible factions or decide to run on sound principles that happen to disagree with somebody else? But then as time goes on, the machine becomes optimized to just become what you need to do to appeal to the basest emotions of the larger chunk of the rabble to win. that is logically what will happen given enough time. And I think that's not what Tony wrote. Tony wrote Cleanies and that, and you'll see the welfare state, the way it keeps on expanding, because no one can be elected today who will try to address never any budget deficits. Like in America, I'm amazed at the moment we're running 6 or 7% budget deficits. People talk, and that's in boom times. People talk about how much worse the US GDP would be without AI spending, but you have to ask yourself, okay, AI spending is arguably productive, so you could say it's a good thing. It will lead to massive productivity gains, so we should be spending money on that. But you see budget deficits year in, year out. That if you took 6% away, GDP would be negative in America. I mean, I think I don't know why that's not more widely discussed, and that is at this stage really a structural issue. They can't and no politician will be elected who remove that. So that is again a problem with democracy. That is something that's quite mechanical and logical, but I don't see how it can be corrected because no voting bloc will choose that path. It'll only happen because it's forced upon them.
So when it comes to financial markets, then what is how do you rationalize this into how you approach investing?
Personally, I would say do your own homework, but I'd say you'd have, let's say, an uncomfortable percentage in old-fashioned quantitative trend following. And that does not mean the man AHL type people, because they do the very low volatility AUM type, because they want the kind of strategy that's going to not scare investors away.
Right.
So, for example, just so the listeners understand how uncomfortable this could be, last April, I think this fund that Tim and I are talking about was down 40% at one point. So you may say you want 20% compound over time, but you need to know you have a horrible month like that. That was a very bad month, and worst they've ever had because of Trump's little April the 12th Freedom Day or whatever it was. But you need to have exposure to those things, or a low volatility one that you can handle. Then I'd say decent allocation, something like gold, but I would rebalance it. So I wouldn't let it run away percentage wise. I think that's something I would respectfully disagree with what I saw Tony doing. The position size tends to move with the price percentage wise. I just think it's too hard to time that thing. So I don't think I can do that.
So, sorry. I've just on that point. I think I've misunderstood what you meant.
So let's say you start. I think you start if you have 10 or 15% in gold and it runs up to 56% portfolio because of price appreciation, and your stock's not doing that. I don't think that's. I think you need to keep on. You need to pick a number. Let's say 20%. Just keep on rebalancing at 20% every few years.
I see. Right. Yeah. So it doesn't become a dominant part of your portfolio. Yeah.
Yeah, like in 2011, I think in Fund Tony runs, I think his gold and gold stocks were in the high 60s or something. Like, I mean, it was massive. I'm not saying I could time it any better. I don't think I can. But then I just, the world's a big place. There's other things you can invest in. It doesn't have to be the one thing. And then the rest of it, I think, are globally diversified, and I mean properly globally diversified. Value investing, and with people that really know what they're doing in those areas. Like Tim said, it's very hard for people like us to really know what is going on in Indonesia. Like, what do I know about Indonesia, honestly, on the ground? So you try to find people that really do, that you trust. And you leave them alone, and you rebalance periodically. And you give people lots of time to prove themselves out. Not too short term, like give them many multi-year periods to, unless they give you a good reason to. Like, for example, I'm being a bit mean, but Nick Train, to pick a UK guy, like some of his recent decisions or not decisions are quite alarming, really. Like the way he lets valuations completely run away with themselves. But one of his holdings, the PE ratio went to 80 or 90, and it's not even a high growth stock, and he just never sold any of it. You're thinking, I don't know what he's thinking. But there's some clues like that will manage to do that, but he's getting too lazy, too comfortable. There are clues to get out or move on.
Brilliant.
What about you, Paul? Are you 100% trading, or do you have
no? I'm at the
closet MSCI index tracker there somewhere?
No, I've some portfolio decisions in pensions and things like that, but I'm in the process of setting up my own fund, and with a friend of mine and he's just doing the kind of back office stuff. And yeah, so I'm kind of, I guess what you could say is that I've spent the last however many years, 30 years, sharpening the knife to the fund that I want to create. And if I fail, I'm just going to ask Tim if I can invest in his, basically. But I want to give it.
You need to ask Paul.
I want to try myself, and that's the only thing. I like to do things myself. I like to think, even though I have a tremendous amount of respect for the way people are approaching the markets, I still would rather try it and see if I can apply the knowledge that I think I've got. Even if I'm wrong, I've got to do it myself. And then if it doesn't work, I would just do pretty much what you've said. And I do find, you might not really understand this, but I find what you say really inspirational, because you look at so many different areas and you really unpick the way they're thinking in a way I admire, actually. And I almost find it a challenge to say, right, I'd like to set up a fund that Jonathan Escott would look at and say, actually, that guy's doing a really good job. And it's a weird thing that I should just think I should do a good job for myself. But the way I tend to get motivated is by almost having to prove something. And it's just a competitive thing, I suppose. And I find that really helps, that you've got someone who's going to tell it as it is and just say, no, that's crap, or no, that's really brilliant. I'm not sure if that made any sense to you, but that's
Yeah, good. I think that's good. I'm happy for you, because it's much more, because you should put your practice. Well, you should. I think it'd be good. I think it'd be good for you to put, because you've been a teacher of these things. It'd be good to put into practice, because I think there's a difference between the theory and the doing. I'm sure you've been doing PA your stuff anyway, but it'd be to run on your own fund and all this other stuff that comes with that will be interesting.
You say teacher. I've been more an analyst than a teacher. I've been a teacher and an analyst at the same time. I taught at the City University for a while on technical analysis, but that was while I was an analyst. I'm still an analyst. I write reports for clients who wouldn't pay me if I didn't get the markets right. So that's kind of what I do, but there's a big step to then making that a full-time endeavor. You have to clear the decks of everything that you're doing, in my view, and just focus on that sole thing. And that's basically what I'm doing. I'm in that process, and it takes time, and it's got to be thought out in a way that makes more sense than just giving your money to someone else and saying you do it. And there are some great people who would be the first people I would do that with. But as I say, I've got to I want to do it myself first.
Oh, cool. Well, I'll look forward to hearing more about that. See how it goes.
Yeah, absolutely. It's taking longer than expected.
These things always do. Like I'm on this board with, can't overshare, but some of the stuff you have to deal with, like I'm on the board of this thing for Troy. It's all fine, but some of the compliance stuff, it's amazing. It's I just think there's definitely a line where common sense has been, got to be careful what I say, really. But sometimes there are things that just not issues, but you have these things escalated to you, like it could be drama, and you realize you've not got a passport copy from some 95-year-old lady in a nursing home, and you're going, come on, man. Do we really need to warn the central bank? We've got a problem here. I mean, she's 95. Well, it's a board's risk. It's your decision to take. If you're happy with that exposure, and again, she's 95. I'm pretty sure it's understandable. Any human being should be understand why she's maybe not responding to your repeated email requests for more documentation.
Oh my God.
No, but you'll see, Paul, you'll see in a year or two, once you're in it, you'll suddenly see, oh wow, you can't just laugh it off. It's real.
No, I believe it. It's the only that it's a real problem being in a position to be able to accept money. And the initial strategy is that I don't think I want to, for at least a couple of years, to show some form of track record, and then we'll take it from there, regardless of whether people wanted to or not, I don't think that's a good idea. For myself, I'd need to prove it as much as for anyone else. So my colleague is someone who's worked in compliance for a fund, and he's leaving his job. And it's someone who I wanted to work with for a very long time, but he's always been employed, and he's a coder as well. So he's kind of writing all the code for the fund. Some of it's going to be algorithmic, some of it's going to be my own take on where I think things are going, so discretionary. And anyway, it like you say, it takes much longer, but I'm hoping not to have to deal with problems like that for a little while. In any case, or kick it down the road. But at some stage, I am going to have to deal with the prospect of dealing with investors, which is going to be another set of problems. But getting the markets right is the main thing.
Yeah. Well, the other thing to think about is the trade-off between what you'll need to do to win AUM and also what you might want to do with your own money and no one else's, because that's difficult.
Yeah. And
Like that Paul guy I mentioned earlier on, he could have a $10 billion fund, no problem, if he just toned down the vol. But he's not that guy. He hard caps the fund at 500 million because that's just what he's like. He's not changed a line of code in the program since the very beginning. And when I said to him, but there's new instruments like Bitcoin, he said, yeah, but it wouldn't be fair to investors if I start tweaking the program now, because then they would sit that as not representative of what made the track record what it is. So he's very particular. Like, I think that's a bit extreme, but that's how he is. But he said with my own money, I in the firm, I do include Bitcoin and other things. And so he's running all his own other systems because he does not put all his own money back in that fund. I mean, if you think about a fund that size for that long, he probably has more money than that himself. Entire fund at this stage and from fees.
Yeah. And I guess it would, yeah, that makes sense. I mean, I would say you deal with all products that come along, and if you've got something that is a natural hedge and non-correlated to other assets, there's no reason not to include it, especially if you want to include. But I also respect why he doesn't. We're all different, aren't we? So, so on that note, you mentioned your media pick. I think you've already given it to us, haven't you? Or have you not given us the full
One
name?
is called a book. Basically, a good gate. If you're a very analytical kind of a person, and you're remotely open to just reading a book by a theologically minded person that's successful and not going to be weird or woo-woo. It's this Edward Fesser, like an analytical philosophers are much more logical type people. So and he's very if this then that, and but how do I know? Like he'll deal with all the arguments and go back and forth, and he'll be wording in a way where you'll be going, yeah, but Richard Dawkins said this, and what about Christopher Hitchens? He said, well, if God is good, then why is there evil and what? And then he'll go on and on about. He's quite good at dealing with those kind of obvious problems that most people Ricky Gervais would have. I'm quite sure. I find Ricky Gervais funny, but some of the stuff he posts, I just think he's obviously never read or engaged with anyone who's just quite calm, a serious religious person. I'm being a bit rude, but I'm pretty sure he hasn't. But I'm only aware of this stuff because I was raised in very nice Catholic environment, went to Benedictine monastery boarding school. I know they've done, as in Catholic churches, not decorate itself with glory with certain things, but I'm also aware that politicians haven't done very well. We haven't abandoned politics. So they're bad economists, they're bad doctors. Just, bad people do bad things, but it's not like the sources of the faith told them to do that. They're obviously highly evil people at those things.
Yeah.
So I do feel a bit defensive about that because people will say, well, how could you be part of the church when it's like, hold on, it's not the same thing as the book said you should do that. In fact, I think it's someone rather famous said, if you touch one hair, if you harm one hair on the children, you will have harmed me and woe betide you. So like, it's the worst thing you could do. So I just think a book by Edward Fesser, or The Last Superstition, is a really, really good one because he's dealing in a quite provocative style with the claims of the new atheists. So more of a Ricky Gervais kind of how would you answer him? And then there's a lecture given here. This is a bit unusual. There's a lecture here about Professor Robert McNamara. He's a theologian, but it's not theological really. So he's going through why AI isn't actually conscious or thinking. I mean, I can't believe I have to say it, but it's just obvious. But he's written a quite a long, thoughtful article. I actually put it into Notebook LLM and converted it to a podcast. Have you ever tried that?
I haven't, but I know people who have done it.
That is quite a spooky use of AI because it's just uncanny how it can do that. And I was dubious at first how this fake man or fake woman could be talking for 20 minutes, but they really do. And they draw on resources, not just from that article, they draw from supporting materials they find all over the place. So it's very impressive. If you want to listen to it, it can do that as well. So I'll send you that link and you can stick it on the podcast page if you like.
Brilliant. Tim, was there a pick you have for us?
I'm going to have two. One is just to give credit, in passing, to the great theologian Woody Allen, who said, if there's no God, I definitely ever paid for my carpet. And my film pick is one I saw last night, which is a very recent film, 2025, Everything's Going to Be Great, starring Alison Janney, who people may know from The West Wing, and Bryan Cranston, who people will know from Breaking Bad or Malcolm in the Middle. And it's basically about a couple and their family and their sort of theatrical bent. So Bryan Cranston does small local productions, and his younger son is a thespian and desperately wants to get to New York and be an actor. And it's a sort of film they don't really make much of anymore. I'd call it quite a sweet, charming, twee, lovely little film. It's a comedy, but it has quite a bit of darkness to it as well. It's called Everything's Going to Be Great. And pay no attention to the IMDb rating, which is only 5.6, because it should easily have a 7 handle. Everything's Going to Be Great. Great fun.
Brilliant. That's a great way to end the
Is it going to be? It's not a bit pessimistic, is it? Is it a bit, because with Bryan Cranston, hopefully it's going to be a bit funny.
Oh yeah, no. Bryan Cranston gets most of the good lines, and I'd say some of it's laugh out loud, and some of it's just sort of quietly chucklesome. But it's definitely a comedy first, and everything else afterwards.
Well, I'm quite upset. I've got a very lowbrow interest in movies. I honestly don't watch. I read different.
I think it'll cater to that.
Okay, good. Thank you.
So mine is a YouTube video which is about iodine in salt, which I was absolutely shocked to hear about, and for reasons of me having a hard stop and not being able to go into too much detail, I'm just going to provide a link. But it's got 1.9 million views. And the headline of it is the easiest way to make the world smarter. Basically, iodized salt was something that was done just because it would help the population. And now it's not done anymore. It's just an incredible story, really. And it kind of made me go out and buy salt that's got iodine in it, which is actually a lot harder than it seems, because most of it doesn't.
Are you expecting a nuclear war?
It sounds something like that, but it's when you watch the video, you'll completely understand. It's just incredible. It's just one of those things that I was like, wow, how do we not know about this stuff? So that's why I've got to share it with you. I'm really sorry, but I've got to.
What's the name of the film?
It's not a film. It's a YouTube video. It's by a channel called Rabbit Hole. And the headline of it is the easiest way.
I don't believe in cruelty to animals.
The easiest way to make the world smarter.
Okay.
Just absolutely fascinating 30-minute YouTube video, and
I will look at that, because I remember someone else telling me that I thought he was a bit of a crank, but now I'm not so sure.
Yeah, no, it's
why did he take iodine out in the first place? Because this guy was saying, buy the cheap, crappy table salt is better for you than all this Himalayan Ponzi salt, because it has the iodine in it. But so it sounds like I'll give that a look.
Yeah, definitely. Once you've watched it, you'll see why. But Jonathan, I'm really sorry. I'd love to chat further. It's completely my fault that I've got a hard stop here. But there's so much more to talk about at some point. And just thanks again for coming on the pod. I've really enjoyed it, and hope to have you back soon.
Thanks, guys.
Thanks, everybody. This podcast is for entertainment purposes only. Please do your own research or contact a professional advisor.